Good morning and welcome to this Thursday, October 17th, 2019 edition of Trading Places Live right here on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host of Trading Places Live, featuring everything you need to know as you prepare for the trading day ahead. All right, well, we've got a number of things that we've got going today. We're going to go ahead and jump into a daily market recap. A lot of economic news out we'll talk about. Get into earnings spotlight. Earnings season definitely beginning to kick into gear. I've got probably, well, if I can get through them all, I don't know, maybe 20, 25 earnings reports. I'll try to get through very quickly. We've got a few upgrades, downgrades, going to get into sector rotation, looking at some of the different areas that you might want to be considering. And then, of course, finish off the show with three you must see. That is where I give you three stocks that just based on their charts, they're just three that I'd be paying attention to as we head into the action today. All right, let's get into the daily market recap from yesterday. You can see the Dow Jones Industrial Average down 23 points, the S&P down 6, the NASDAQ down 25. The Russell 2000 went against the grain, actually gained a point. Looking at the individual sectors, technology down about 2/3 of 1%. It was a pretty weak day for technology yesterday. Discretionary stocks did move higher, along with communication services. Industrials, however, were flat. I mean, really looking across here, you can see things were pretty flat. I do want to point out on the staples, though, I think if we go back about a year on this chart, so let me pull this up for a minute. I would expect that we are going to get a bounce on the staples group, and the reason being, if I connect these highs, I'm going to annotate this. But if I connect the highs and the lows, what I like to do a lot of times is just use the high, come across here. If I can get a good, something like that. Although I'm going to want to stretch it out, make it a little bit longer. But right there, I think if I take this and drag it down, you will see that if we connect these recent lows, I would go all the way back to this low in January, the one in May, early June, and then again in early August. You'll see we've come down and we have tested this trend line. So this is one of the sectors that I'd be watching today. I would expect that we're going to see a bounce in consumer staples. I don't know if staples will lead the action, but I would at least think that we will begin to move higher. I think the market's going to break out, and I'll talk about that a little bit more throughout the show. Let's see, that was part of what we wanted to go over, but I also want to talk a little bit about these economic reports. Yesterday, retail sales were weak, but I'm going to pull up the XRT for you in just a moment. Retail sales came in at negative 0.3% for September, and should have been, or at least the market was expecting, a rise of 0.3%. So that was a really big miss on retail sales. October housing market index, though, 71 versus 68. Housing stocks had a really good day yesterday. And then this morning, we got a mixed picture on housing. We got the housing starts coming in for September below expectations, 1,256,000 units. The market looking for 1,300,000 units. Building permits, however, were better than expected, 1,387,000 units versus 1,335,000 units. I like to pay attention to that building permits number. To me, that's the one that, you know, you're looking out and looking ahead. And also, not every part of the country requires a building permit. So when you get good numbers coming in building permits, that's generally a good sign for home builders. And that was a strong number coming in. Initial jobless claims came in at 214,000. Of course, that's about where we've been seeing these jobless claims for quite some time, that lower 200,000 range. The October Philadelphia Fed Business Outlook Survey came in below expectations, 5.6%, or excuse me, just 5.6 versus 7.1. Later this morning, in about 10 minutes or so, we'll be getting the September industrial production, which is expected to decline 0.2%. In August, it was actually up 0.6%. So looking for a little pullback there. September capacity utilization, 77.8, looking for a slight decline from August 77.9% level. The 10-year Treasury yield And I want to talk about this a little bit because it's starting to show a little different picture to me. If you go down and look at the RSI, when you're in a downtrend, which obviously we've been in with the 10-year Treasury yield for some time, typically you see RSI 60 as a key area of resistance. And that was the case all the way down until we got to the bottom at the beginning of September. And then to the downside, you see RSI going down below 30. So a lot of times your range on an RSI in a downtrend is from maybe 20 up to 60. Well, when you start to reverse that, first thing you notice is the RSI doesn't stop at 60. Here it goes up to 70 in September on this move. And when we pull back, notice we don't go back to 30 or even below 30. In fact, we barely get down just below 40 and now start to turn back up again. So I'm starting to see a little character change there in terms of how the RSI is being reflected on the 10-year Treasury yield. And the other thing that I think is worth noting is during the downtrend, notice the daily PPO remaining negative, but now twice in the last 2 months, we have turned positive. So I think the 10-year Treasury yield starting to turn back to the upside. We haven't gotten the confirmation on any kind of a breakout, but this does start to give the bullish argument, or maybe adds a little bit to the bullish argument in terms of if the 10-year Treasury yield is even beginning to start a slight uptrend, that would really help because that would be money rotating from the defensive Treasuries into the aggressive equities. So that's something we definitely want to keep an eye on and continue to monitor. But the 10-year Treasury yield starting to look more like it wants to go higher to me. All right, let's move on into earnings spotlight. I tell you, there are a ton of companies here, so we're going to try our best to get through those. Before I even get into those, and I'll start with IBM in just a second, I do want to show you another chart going back to that retail report from yesterday. September retail sales came in horribly. The XRT, which is a widely diversified retail ETF, went up on that news. That is unusual to see that kind of a miss and then have the XRT go higher. Tells me maybe the bottom is in. We've got this double bottom from December of last year and August of this year. I would be looking at this high up here at 46 as a major resistance level. Based on the way the XRT traded yesterday, I think we could head up to that 56 level. And if we break out above it, that would be extremely bullish for the XRT. So just wanted to mention that. Now let's get back into these earnings reports. IBM came up short on their revenues, beat expectations, though, on the bottom line, 268 versus 264. I was actually looking, and some of these pre-market, this is from probably 15, 20 minutes ago, but IBM was down 6.6% in pre-market. So we are looking at a breakdown below this low. I would be looking maybe back to that August low, around just below 130, and then a much bigger support area, in my opinion, is that May low down around 125. So I suspect that what we're going to see, especially if I'm right about the market going higher, a number of these companies that come out with bad news and gap down, probably going to print some hollow candles. So another thing to be watching for with these earnings reports. If companies do move lower on their news, let's see how they trade after the market opens. Netflix, probably could have started with this one. This one is a little surprising to me that it's being responded to as favorably as it is. The stock is up almost 8% pre-market. They matched revenues. They did beat on the bottom line, and I've got two different numbers. One at Zacks is saying 147 versus 105, but on briefing, I saw 109 versus 105. So I don't know which one's correct, but they were both beats. Obviously, 147, though, is a massive beat. They guided quarter four revenues and earnings per share lower, and they missed their subscriber target. So I kind of viewed this as a mixed report at best, but obviously the market likes it. A lot of volume on this selling that we saw earlier. So if we get back up, and I think it was trading up around 310, that would be a breakout above the 50, would continue this recent advance that we've seen. So that would be good news. This is one I wouldn't be surprised maybe it comes down after earnings. You know, we get into the trading day, but we'll have to see. CCI, and these are in market cap order, by the way. So CCI is Crown Castle International. They beat on their top line, beat on their bottom line, was up fractionally after hours. I would be interested if the stock gets back up above its 20-day moving average. It's definitely got an uptrend in play. It's got a short-term wedge, so you can see the highs coming down, the lows here, a little squeezing piece of pie. That's a bullish wedge. A breakout above that 20-day moving average would be bullish on CCI. CSX, this was one I wanted to watch pretty closely because it's in the railroad group. And if you follow my work, you know that transports are very important to a move higher in the S&P 500. Railroads have not been performing so well. CSX, though, matched revenue expectations, beat the bottom line, $1.08 versus $1.01. Stock was up a couple percent after hours and this morning, so it was back up around the 71 area from what I recall. Still, we're going to need to get a breakout and move above that gap resistance. I think 73, 73 and a quarter is going to be the biggest number on the CSX chart. But righting the railroads would be a big step forward for the market. So CSX will be one to watch today. KMI, this is Kinder Morgan. They missed on their top line, matched bottom line. Stock is flat, or was flat the last time I looked, and it's been flat for the last several months. United Rentals, URI. Another stock's been going sideways for quite a while. It's been underperforming its group. They did come in and beat top line barely, but they did beat. Bottom line, nice beat, 596 versus 553. Stock down, though, almost 1% after hours. Pretty surprised that we weren't getting a little bit better reaction there, but I think we're just in this trading range here on URI. CCK, Crown Holdings, been going sideways on a relative basis, been a pretty good performer. Missed on revenues, missed by a penny on the bottom line. $1.56 versus $1.57. Stock down about 2.5% in pre-market earlier. All right, let's move on to this morning's action. Philip Morris. So this is PM. They missed on their top line, beat on the bottom line, though. 143 versus 135. Was up a little more than 1% in pre-market action. Does look to be uptrending now, breaking this downtrend. Longer term, sideways, but I would say short-term uptrend as long as we hold that 20-day moving average. Honeywell. Honeywell missed on the top line, beat on the bottom line, 208 versus 201. And that kind of is a theme that I'm seeing so far in earnings season. Let me just add these up real quick. That's 5, 8, 10, 13, 15. So of the 20 earnings reports that I have here, 4, 5, 8, 10, 11, 12, 13, 14. 70% of them beat expectations. 14 in terms of earnings. 14 beat earnings expectations. 70%. 4 missed and 2 matched. So we're off to a good start here in earnings season. But what I am seeing more of is revenues falling short. Of the 20 here, I have 9 of them falling short in revenues. So almost half are missing revenue numbers, but that's only translating into 4 of the 20 missing on the bottom line. So companies are doing what they need to meet or beat these expectations, but it's not coming from increased business, at least not at this point. All right, so Honeywell missed their bottom line, missed top line, beat bottom line. Slight increase in pre-market action, up about 0.5%. I think it just continues to consolidate. This looks like maybe off of an uptrend. If you connect the highs, then connect these lows, we might be in a symmetrical triangle, which would argue for higher prices eventually. Normally, that's a continuation pattern. It's following a bullish trend to the upside, so we would expect a bullish breakout. Next up is UNP. I did not see the revenue number on UNP, but bottom line, they missed 222 versus 229, and the stock is down 2.6%, or was down 2.6% earlier. So yesterday looks like failure at the 50-day, or right on the 50-day, rolling back over. We're going to want to watch this trend line. It looks like it's in a channel right now to the downside. So until that broke, I'd be a little concerned. Morgan Stanley, this was actually one of the best reports that I've seen so far. This was a pretty good one. Big beat on the revenue side, over $10 billion. The market was only expecting $9.6 billion. Beat on the bottom line, 121 versus 110. And the stock was up almost 4% pre-market. Wasn't really showing it going in over the past couple of months. I just see sideways action. I don't really see much in the way of relative strength. So I think the numbers came out better than what Wall Street was expecting. and as a result, we're getting a little bit of a pop here. Need to get through this double top up here around 45.5, though, for things to turn more bullish. If you're taking a shot before that, watch the 20-day. If we're really and truly trending higher, that 20-day moving average should hold on any pullback. BB&T, of course, this has been a crazy week for the banks, but BB&T had beaten its 52-week high, had broken out prior to its earnings report. That was back at the early part of October, fell, and then started rising into its earnings. They did come in with a beat. They beat top line, beat bottom line, up about 1%. So it looks like it's probably going to challenge this new high or the recent new high up just below the 54 level. Breakout above 54 would be very bullish for BB&T. SunTrust, STI, they did beat on their top line, matched estimates on the bottom line, though. $1.40 versus the $1.40 expected. And SunTrust, you can see very similar pattern. The stock is up about 0.5% pre-market action. So another one that may be trying to make the breakout here. Ericsson, this one was kind of a weird report, I thought. It's been moving higher, really strong volume trends on this move to the upside, but they had a big miss. Unless the number on Zacks was incorrect, I saw a loss of 19 cents, market expecting a gain, profit of 8 cents. So that was a 27-cent miss. They did beat on their top line. The stock up 7% pre-market. I did not see guidance on the stock. Maybe there were some positive comments about the guidance. You can see the volume was picking up on this move heading into earnings. So I don't know. Market looks like it wants to go higher there. PPG, this is PPG Industries. Been in a nice uptrend. Looks pretty good. Top line, they fell a little short, $3.83 billion versus $3.89 billion. Bottom line, $1.67 versus $1.61. I was seeing almost unchanged based on the pre-market. You do have to be careful with some of these stocks, though, in pre-market because there's not a lot of liquidity. So you can have a stock that doesn't look like it's doing much pre-market, and it could open up 5% higher or down 5% higher. So you got to be a little careful from those early readings. MTB, and just about through these earnings. MTB, equal highs coming across here at about 160. So, and that was an area where we had held support, 157, 158 up to 160. And that's been that area where we've been turning to the upside. MTB comes out with its earnings. They did beat on the top line, missed on the bottom line. And I think this is the only one I saw where there was a beat on the top line and a miss on the bottom line. MTB came in 347 versus 361, and I did not see pre-action or pre-market action there. Let's see, what else do we have? Key, K-E-Y, this is Key Corp. This one, a little bit of an uptrend, needs to get through 18.5, no doubt. Might be able to do it today. Did fall short on revenues, but beat bottom line 48 versus 47. Stock was up more than 1% pre-market action. A couple more here, a little smaller companies. Dover Corp, DOV, did beat top line, beat bottom line, was up about 1.25% higher. This is another one, and what I'm seeing here is maybe a symmetrical triangle. Some might call it a head and shoulder top, left shoulder, neckline, head, right side of the neckline, right shoulder. These, to me, are misleading, especially when you're in uptrends. They usually don't break. So I don't look at this as a head and shoulder unless we got a heavy volume breakdown below 87.50. I don't see that in the cards. Instead, I see an uptrend, lower highs, higher lows, symmetrical triangle. I expect higher prices here. TXT, the final one I have for you, did come up short on revenues. Easy beat on the bottom line, though, 95 cents versus 85. Stock down 3% pre-market action. This has not been a favorite in the aerospace group. And even with a pretty decent report, at least on the bottom line, traders not impressed. So the stock heading lower. It's just got to reverse this downtrend. And for now, I don't see anything encouraging on the chart. I would be a little careful. All right, let's move on to upgrades and downgrades. Just got a few of them here for you. I'm going to start with Cirrus Logic, CRUS. This is a stock that was upgraded this morning. Big push to the upside here with that earnings report back in early August. I think we've just been consolidating. What we need is a confirmed close. I'm going to say over 57.5 at a minimum. But what I'd really like to do is see it take out that high because that was massive volume. So when you got up to 60, that was where sellers kicked in. So 60, you could see some more selling. I'd like to see a big breakout above that 60 level. Maybe it comes today with this upgrade, but it has a lot of work to do. It'd have to move up more than 10, 11% to do it. Teva, TEVA, this is Teva Pharmaceutical. Been in a downtrend forever and a day. It's been a horrible performer versus the pharmas, and pharmas have been awful versus the S&P 500. Maybe this was a value call. It's being upgraded. I'm not a fan yet. I'd have to see it really start to look like it's in an uptrend, and this chart doesn't show that just yet. If there's one positive, I would say it's that back in August and September at the bottoms when we were getting some of these hollow candles, you can see volume picking up. So perhaps this is in an accumulation phase. I'd need to at least see that breakout above 8.5 before I'd get interested, though. HIG, this is Hartford Financial Services. Stock pulling back, consolidating here. I'd want to see this recent low, 57.75 or so hold. This has been a pretty good stock in a fairly strong industry group. You can see relative to the S&P, its peers have been doing well. Stock's been doing well. It did get upgraded today, so let's see if we can get a breakout. A couple of downgrades. ASML, I had high hopes for this company going into its earnings report. It fell short yesterday. You can see the stock down almost 5%, big volume. Still in an uptrend, but definitely concerning after trading so strongly into earnings. I think they came up short on their bottom line, I believe. It was one or the other, revenue or earnings per share. I think it was earnings per share. But stock not being treated very nicely yesterday on heavy volume. Let's see if this 250 level holds. You got price support and that rising 20-day moving average. Cheesecake Factory, CAKE, restaurants, been taking it on the chin here a little bit the last couple months, but for the most part, restaurants have been strong in 2019. Cheesecake really had not done its part, although as the group is weak in the last 2 months, we've seen a little bit of strength in Cheesecake, but I still see a downtrend. I'd avoid it. MNST, another downgrade. Stock's been downtrending for a while. You can see soft drinks going higher. Monster's been an underperformer. I see nothing yet to change that. And the last one, Whiting Petroleum, WLL, another one that's been downtrending for a long time. Very weak among its peers, getting downgraded. I'd be downgrading it too, looking at the chart. All right, sector rotation. And what I want to do here, I'm going to go into my relative strength sectors first. And what I can do is I can pull this up into a summary and then change the period. The last week, we've seen a pretty nice move, about 100 points on the S&P 500. So I want to see what's been leading. So over the last week, if I look at this, financials, communication services, industrials, consumer discretionary. Here's technology just kind of going along, well, actually a little bit below, not really for the ride. But this is a 1 week outperformance. Well, it is a little bit outperforming, so I'll give it its due. All 5 of the aggressive sectors are at least even with the S&P 500 or above, and 4 of them are the leaders. I like that. To the downside, remember all the recent leadership we've seen in real estate, consumer staples, utilities? Well, that's what you see when a market is consolidating or trending lower. You don't want to see them leading when the stock market is going higher like it was last week. We didn't see that. Real estate, consumer staples, utilities, very, very big laggards to the downside. That's not bad. That's what you want to see in a bull market advance. I think this could be the real deal. We could be seeing a breakout. I think earnings season could be the catalyst. I think the Fed being accommodative could also be the catalyst. I would not overlook what they just did recently by agreeing to buy $60 billion a month in treasury bills, short-term treasury bills. That is going to increase the spread between short-term and longer-term treasury maturities, and that fits right into the financials and into banks. So if I switch this over and take a look at the industry groups, and this is also 1 week. This shows what's been leading. Actually, pretty surprisingly, there's a consumer staple group, tires. I don't know that I would trust that. I would be looking at some of the aggressive groups and seeing what's been leading here. So we've got industrials, we've got consumer discretionary, actually auto parts, maybe as a result of the improving trade and what might take place there. But if you go down the list, you can see autos had a very strong week. I know Tesla was on the move earlier in the week. Trucking, I'm watching for trucking because I'm watching for the transports. So this was a big one. Railroads right behind it. So we're getting some movement up on a relative basis in the transports. I think that could be a very, very strong sign for the market. Not too far down this list is the banks. You can see the banks solidly outperforming the S&P 500, and that's what I would expect with the 10-year Treasury yield on the rise, the Fed being accommodative, trying to increase that yield spread. That all plays perfectly into relative strength for banks. And that's going to be the area I think we really want to watch in the fourth quarter, because I think if the financials continue to lead, as I was just showing, banks will be a primary beneficiary. All right, let's move on to the 3 you must see. And I'm going to start. I do this show here on StockCharts TV on Tuesdays and Thursdays. I do a similar webinar over at Earnings Beats on Mondays and Wednesdays that's free, that you can come over and check out anytime. But I started yesterday with 3 you must see with XRT, and I'm going to do it again today for those of you that maybe weren't in. I talked about this earlier today, but I can't help but be pretty bullish when the retail sales report comes out so horrible. And first of all, the volume is just kind of so-so. It's like no one even cares, and it goes higher. The XRT is not weighted hugely by any one stock. I think that there's no more than 1%, if that. I can't remember if it's like 0.4% or 1.4% is the largest weighting, but it's a very small percentage. And so you've got a ton of diversification. And if the retail sales are that bad, why is the XRT going higher? So that would be the first chart that I think you need to pay attention to, the fact that retail stocks are going up with bad news. Second, this is a chart that I mentioned in my daily market report yesterday to Earnings Beats members. I actually like this pattern, and I'm going to show you a relative chart. The first thing I want to point out is that footwear relative to the S&P 500 has really taken a big jump just over the past 2 months. You can see the huge move in footwear. So when I see bullish patterns emerge in stocks within bullish moves, I grow even more bullish. So what I'm seeing here is equal highs coming across. So right off of this uptrend right here, equal highs, and then of course we have the rising lows. So that is an ascending triangle. And I always talk about ABCDE pattern, A, B, C, D, and this could be a breakout. That's E. That would measure up another few dollars, probably up to about 41 or so. I think Skechers looks really good. So that is my number 2 stock. And let's go ahead and set this in here. All right. And then my final is a small company. This is Big 5, but it's in the specialty retailers. I just mentioned retailers we want to keep an eye on. This stock has been beaten down, but I am now beginning to see a nice uptrend in play here. I think that this is a stock that you want to pay attention to. Here is your uptrend. And yesterday, volume came in, and you can see clearing a prior high. That's been an area of resistance. We broke it yesterday. Stock was up 7.5%. Volume starting to pick up. I think this is a stock you want to keep an eye on for sure. And those are your 3 you must see. And we are now ready to close things out. Should be a good day. There was news that the Brexit deal was going through. Of course, the UK still has to approve it, but that looks pretty good. So futures looking pretty solid today. Thanks to all of you for being with me today. Really appreciate it. Check out my show every day, 9 to 9:30 a.m. Have a great day, everybody. Happy trading.